We're joined by Ric Campo, CEO and Chairman of Camden Property Trust.
Rick, thanks for joining us. How do you feel about the current state of Camden's balance sheet?
Well, we're in really good shape. I mean, in the last 12 months, we've raised $1.2 billion to improve the balance sheet, basically taking short-term maturities and stretching them out 10 years, and we've recharged the balance sheet with equity. It's been a very busy year in terms of capital market transactions, and there were some really interesting value add plays for our shareholders. We, in the multifamily space, we have Freddie Mac and Fannie Mae, which is a really good thing relative to other commercial sectors. And what we did was we went out and borrowed $820 million of 10-year financing, bought back $450 million of our short-term debt. So we basically made a spread between long-term financing with Freddie and Fannie versus short-term, taking out our short-term bonds. So it really extended our maturities and put lower rates in place for a long time.
And looking forward, what kind of challenges do you see for the apartment sector?
Well, the apartment sector clearly has challenges for 2010. Our industry basically lags the economy by at least 6 months, plus or minus. And so when you look at the economy today, we're continuing to lose jobs, even though at a lower rate than we did in the past. But 2010 looks like it's going to be a lot like 2009. Just a slugfest for operators. Rents probably still declining. Occupancies may be holding their own, but really sort of a repeat of 2009. But beyond that, 2011 looks like a good transition year. When you look at the supply and demand dynamics for multifamily, they're really good. I mean, we have very limited supply with a credit crunch. We have great demand coming through baby boom echo demographics that are really high propensity to rent people. So beyond 2010, it really looks good.
And as the economy begins to recover, what kind of role do you see for REITs in the commercial real estate market?
I think it's going to be just like the early 90s, where you had a situation where the REITs really started dominating in the early 90s. For example, when we went public in 1993, we went public at $250 million market cap. By 1997, we were $1.1 billion. And it was all about just buying properties, re-equitizing the private sector. And I think that's what's going to happen this time, is that when you look at the amount of commercial mortgage debt that's coming due, in the next 3 years you have $600 billion of commercial mortgages coming due. Multifamily, it's about $200 billion. So when you think about what has to happen in terms of getting all that mortgage refinancing done, you need a lot of equity to do that. And the private markets just don't have access to the equity that the public markets have today. So when you look at this year, the public equity markets have opened up about in April, and public companies issued $25 billion of equity since that time. Camden issued $272 million of equity. We did it in 6 hours in May. So it was really quote unquote easy to do, and the window was open. Very, very expensive due to that equity, but I think over the next 3 years, the REITs are going to get bigger, and they're going to tap the equity markets to refinance the private sector, just like we did in the early 90s.
Should be interesting. Thanks a lot for your time, Rick.
Absolutely.
For more information on this and other REIT news and analysis, check out REIT.com.